Phyllis Wakiaga, CEO of the Kenya Association of Manufacturers, last week lamented that the commitment by the National Treasury to adjust the VAT refund formula, which has been redented to the export to ensure recovery of the portion of import tax relating to zero-rated supplies, will incentivize Kenya exports.
For manufacturers, we are still keen in the long term to see it come to zero because for raw materials and industrial inputs, having the IDF and RDL on those products just simply makes us uncompetitive. There's a positive move to increase it for finished products, but we think that the raw materials genuinely need to have that at 0% for us to be competitive as a country.
This follows after several complaints by the manufacturers who are owed 20 billion shillings VAT in refunds. During his budget speech, Treasury Cabinet Secretary Henry Rotich promised that a bulk of refunds will be cleared within the next 2 months so as to boost business cash flow. Responding to a query by one of the local media, KRA said it paid out 2.2 billion worth of refunds in April and 2.5 billion in May. The taxman says the arrears are being processed even as the government seeks cash to settle them. Wakiaga further stated the commitment by the National Treasury to adjust the VAT refund formula, which has been redented to export, to ensure full recovery of the portion.
For the manufacturing sector, this year a number of our proposals were picked up. One of the areas, if you look at excise duty for some of our sectors, the beverage sector, our cigarette manufacturers and others, excise duty, a 15% increase was introduced. That includes the inflationary increase and also the discretionary amount that the National Treasury CS can put into place.
It is also noted that manufacturers face a huge financing gap caused by delay in settling the ever-rising tax refunds, forcing many businesses to finance their operation from market rate loans, currently at 14%. VAT refunds come about as a result of the VAT export refund formula and the 6% withholding VAT. Last year, Treasury projected that 14.4 billion will be paid out in the value-added tax refunds to traders and manufacturers in the financial period ending June 31st. However, manufacturers have been pushing for both to be reviewed, and during the budget, their wish was granted. CS Rotich proposed the reduction of the rate of the value-added tax withholding tax from 6% to 2%, saying it was to blame for the building up of huge tax credits. Njeri Njogu for Able TV.